Swatika Bangkok. Thank you for having me here. My name is Sarah. I'm the group product manager. Just checking in a little bit to see if you guys can hear me from over here. Yeah, perfect. And I think loud and clear on the headphones. So I work with Brankas, and welcome to IFX 2024. I'm honored to be here with some of our esteemed panelists today. And just to give you a quick introduction, they'll tell you a little bit about themselves. Sam Lee, Chief of Staff of Discovery. Sophie Gerber, next to her, a co-CEO of Traction FinTech. Jonathan Hall, Head of APAC at down the end there. And of course, Naeem Aslam, CIO of Zay Capital Markets. Again, welcome everybody, and thanks again for being here and joining us. The topic today is about the open banking momentum, especially in our part of the region where we see unregulated and regulated markets having different flavors of open banking regulation. Where does APAC kind of bridge the gaps? I'd like to kind of quickly introduce each of the panelists. Can you kindly introduce yourself and your experience within the open banking world? Let's start off with Sam.
Hello, everyone. My name is Sam Lee. I come from the USA. I work as Chief of Staff at Discover Financial Services. We own the third largest credit card company in the US. We also have a payment network that competes with Visa and MasterCard. I'm also active in the startup and angel investor and VC communities in the US. I also serve on the Young Professionals Board of the Lyric Opera of Chicago. My experience with open banking is in my 6.5 years of experience in financial services. I was able to work on making our products compliant with regulation, particularly with PSD2 regulation in Europe, which has an open banking mandate. I'm also responsible for steering our direction as it relates to impending open banking regulation in the US. So that's a summary of my experience with open banking.
My name's Sophie Gerber. So I work with two businesses. One is Traction FinTech, which does regulatory transaction reporting around the world. So in ASIC, Europe, Canada, Singapore as well. And I run another business called Sophie Grace. We do compliance and legal regulation and licensing in Australia. So we interact a lot with financial services and credit businesses. And who are wanting to start up, who are wanting to be innovative and enter the market. So we see people looking at the open banking landscape to determine if that's something that can enhance the product offering that they're looking to enter the market with.
Thank you, Sarah. My name is Naeem Aslam. Been in the industry for over nearly 2 decades. Very little experience with the compliance as my other esteemed panelists would have. My experience has been very much on the investment side, on the institutional side, as a hedge fund trader for Bank of New York Mellon, equity trading with Bank of America, ran the department for various different investment firms as a CIO and as a chief market analyst for them. So I'm very excited to discuss the opportunities in terms of institutions, how the landscape has evolved, and also as an investor in the space. Investor from the perspective of what different opportunities I have availed by using open banking, different solutions which the industry has presented over the years, and how efficient the process became. And for someone like myself with a business which would be very much classified as a small business, but how opaque within the APAC region, these smaller companies have provided a lot of solutions for businesses like myself, and I think it'd be quite interesting to hear what APAC has done within that particular area.
Good afternoon, everyone. I'm Jonathan Hall, the head of APAC at UNO. UNO is a payment orchestrator, and simplistically what that means is we help businesses around the globe improve their payment performance, said another way, increase their revenue, reduce their costs, and improve their checkout experience for their customers. As someone who travels around the APAC region frequently, I'm looking forward to talking about the impact of open banking in this particular part of the world, and of course sharing experiences that I've observed in other countries around the globe as well.
Amazing. Thank you so much. Well, it seems like we've got a variety of experience and expertise that's going to set our narrative. So let's kick things off a little bit on the open banking world. You know, the definition of open banking, just to give you a little bit of context to set the thing straight and also for our audience, you know, what does this mean to you and how has it gained significant, momentum in the APAC region? Maybe Sam?
So if you don't know already, open banking is exposing the data that's traditionally held at financial institutions to be accessible by third parties, also known as TPPs, via an API interface. I'm really excited about open banking in APAC. I think particularly because one is a lot of the challenges that we've had in the US is around making this move while we're on a very legacy infrastructure, and that isn't the case in APAC. Furthermore, the fact that it's one of the most tech-savvy and most vibrant regions in financial services is going to engender a lot of use cases. Finally, the vast potential with the underbanked population as well. There's a lot of potential there for open banking to help create wealth and to lift people up from poverty. So those are the reasons why I'm very excited about open banking.
Absolutely. Thank you. Anybody else to add to?
I think from the perspective where I sit, I think it's more of about mining data, providing choices to consumers while maintaining integrity of the data and making sure that the privacy of the data is not compromised.
Very good.
I guess if I can, just to
absolutely.
reinforce that, a common misperception that I come across when it comes to open banking is what is it and what is it not. And to me, open banking is not one particular product or service, but reinforcing what Naeem and Sam have shared, it's a framework. And that framework is designed or intended to create a shift in the ecosystem towards more open infrastructure. And if you think about historical financial services, they were closed or walled gardens. And open banking seeks to decentralize, to open up, and the benefits for all of us, whether you're a consumer or a business, are that it means you have greater access to your data and you can use your data to benefit your needs.
Absolutely. And, you know, when we think about the kind of wearing the hat of the consumer, if we think of that perspective, you mentioned financial inclusion, you mentioned also open infrastructure and kind of empowerment. How is open banking transforming, do you think, the financial services and experience for the end user in the APAC region? And in your expertise, what are some of the use cases that you're seeing being adopted in this region?
Sure. You know, I'm gonna pick up something what Jonathan said, and it is so true within the industry, because the opportunities that high net worth individuals have, the fund managers have, in comparison to an average person. And that's what exactly you were referring to, the closed gates. And then open banking has opened those particular gates. Because now, as an average Joe, through open banking investment platforms, you could actually do seed investments into your unicorn products, which before it wasn't very much available. Through the apps that you are using, you could very much look at specific areas of expertise. My background has been in trading, and if anyone would have asked me what should I invest in, my answer to them has always been, what is that you like? What's your experience in what field? Are you in the medical field, in a healthcare related? Are you in the service providing field? Whatever you have, pick that particular field because you have the most amount of knowledge. But now, through the apps, they are already very much gauging data of what you are doing and providing you opportunities in terms of a fractional investments. I think fractional investment is the biggest thing which has come only very recently for a lot of consumers, which we can do. So for me, I think that is a major breakthrough, that as a normal average Joe, and we will go into several different business cases for that in terms of what the property investments that we have done, and then open banking enabled us to go head to head against big boys and then get a product which was even better than them. But I think just in the short term, I think the opportunities that the playing field is very much leveled in a lot of terms for an average person and a high net worth individuals in terms of accessing that market, what Jonathan was very much alluding to with the closed gates.
Yeah, absolutely. I think Revolut were here last year at their IFX event, and they have a great fractionalized, experience on their app, right? Amazing.
I can also add to that answer. Open banking use cases fall into two categories. One is account aggregation. I think that's the most kind of obvious use case that people are aware of. This is a use case, for example, where you can see all of your accounts on a single dashboard, and therefore make more granular, make more correct financial decisions for a consumer. The other use case would be payment services. So, for example, account-to-account payments, a third-party provider enabling a payment from a merchant directly to a consumer. And those are the two main use cases.
I like you already. I think you should come and join us at Brankas, because we're an API aggregation service. Sorry for that plug. Yes, Jonathan.
I think about why open banking is interesting for this audience and for a lot of the businesses attending here, based on some of the answers that the panel's been sharing. Think about AML and the risks when it comes to receiving unverified funds from a particular source when you're a broker. Or think about trying to ascertain whether someone is a sophisticated investor or a professional investor, or meets the net asset standards that you may have to enable particular products. All of those things can be done more seamlessly, more readily through open banking, the APIs and the data sharing that they enable.
Speaking of data sharing, oh, sorry, Sophie, you were about to say something. Okay. Speaking of data sharing, what are some of the concerns, do you think, that, if we wear the hat of Jenny, the end user that's looking into embedded finance use cases that you guys have mentioned, what are some of the concerns, and how are these kind of addressed by, let's say, the central bank or financial institutions or TPPs? Maybe Sophie?
Yeah, I mean, there's always going to be a lot of concerns when there's a lot of personal information which is being shared around. So anything that you pay for with your bank account does have the potential to be significantly private, a significant piece of information that somebody doesn't need to know, or that you don't want somebody to know about. And as soon as somebody knows something about you, then they can use it against you. So there is the capacity to negatively discriminate against people once you create a platform where all of their financial transactions can be aggregated into one place. So that is the benefit of aggregating, but it's also a downside. So I think that's a concern that hasn't really been looked at and hasn't really been pushed at this point, because nobody's really come out with a negative experience. So there will be people who are going backwards from that perspective. I mean, and then simply just from the standard ones that we're all pretty aware of, the identity theft, scamming, being able to hack into people's accounts and clear them out. That those are the standard ones that are going around. But yeah, my concern is more around that negative discrimination piece for whatever it is that you choose to do with your money and your financial power.
Yeah, absolutely. I think one of the other things that I'm seeing that's prevalent in this market in APAC is, education. because we're dealing with underserved, underbanked communities. They could be rural, and the use of technology kind of changes the dynamics of behavior, but also thinking. So trust is a very big one when it comes to regulation. Do you have anything to say for Sam about the kind of financial institution, and given that you're at Discovery, what are the kind of policies in place to kind of protect users in the case of open banking?
So I'd say one is the regulatory framework is really critical. There's two parts to it. Of course, there's the potential for innovation by enabling fintechs to have access to data that previously they couldn't, that was previously monopolized by banks. But on the other hand, you're dealing with consumer data, and you're dealing with financial related data, and so the regulatory framework is really important, particularly in the areas of consent as to an end user opting out as to how they want their data used. The second area being the way, if you look at regulatory frameworks, for example, with PSD2 in Europe or in the UK open banking implementation, having a way to vet the third parties as well and making sure that there aren't any bad actors in the system. So those are really important components in the way to create the data privacy protection, but then also allowing innovation to flourish.
Amazing. Thank you. So we're in Asia today, ASEAN, and a fairly unregulated kind of open banking market. We see bits and pieces of standards that are being adopted throughout Indonesia, Philippines, Vietnam, Thailand. In comparison to the EU and North America, how does the open banking kind of landscape in APAC compare to other regions like Europe and like North America? Maybe I could start with Jonathan.
Sure, happy to share. I guess fundamentally the APAC region still has the same two key drivers that the rest of the world does, and A being regulatory driven and B being market driven. And I don't think we're any different in that regard. I think if you examine individual markets, somewhere like Australia is regulatory driven through the CDR, which was enacted in 2019, the Consumer Data Right. And other markets like Malaysia, Taiwan, Japan, they've certainly been more market-driven. Interestingly enough, places like Singapore are a little bit of a hybrid, where they embrace both forces. I do think, though, one of the challenges from ecosystem participants that we all are dealing with is businesses tell their staff, be careful with your data, manage privacy. Consumers are told by governments in the Asia Pacific, be careful with your data, don't trust people. At the same time, we use words like open banking, and we're encouraging people to share data, which of course limits consumer adoption because of all these conflicting messages. So I really believe we're still in the first third of what's to come, because as was said earlier, education is so important when it comes to the benefits of open banking. And those benefits are not really well understood today, and we're hearing negative externalities or contrary points of view around privacy and data, which makes it very difficult here. And then I guess the final comment I would add on, and sorry, is the proliferation of scams in APAC. There are stories every day in the news here about people working in environments in Cambodia or the Philippines where their passports are taken from them. They're calling up people and trying to extract your personal information from you, extract money from you and the like. So today in APAC, people are very, very sensitive, I think, particularly in Southeast Asia, to some of those trends.
Yeah, I was just going to back you up that there is conflicting messaging. I don't think the open banking concept has been widely distributed amongst people in Australia. I was just talking on the weekend with a friend of mine who's a partner in quite a big law firm, and she said, "What are you going to Bangkok for? Talk about open banking. What is that?" And then I explained it to her, and she said, "Oh, I never knew that." And you think, well, she's a highly sophisticated person. She doesn't know. But back on screen scraping, I used to have a budgeting app. It used screen scraping. As soon as I realized, I was like, no way, I'm turning that off. Boom, never logged into that app ever again. But it was a great business. And if they recast themselves as an open banking provider and let me know, I would definitely go back onto that. But for the moment, it's the conflicting messaging, and we're all in a bit of a tricky spot. I think businesses are in a tricky spot trying to push out the concept as well.
Sarah, I'm gonna take completely the opposite side over here in relation to them. Innovation comes by taking risk. And I think this is why APAC is very interesting. And Samantha, who comes from the United States, over there, we could see that some of the innovation races that the US has already lost or is pretty much catching up, especially with regard to Middle East. And I'm really referring to the adoption of the new, let's say, decentralized, the DeFi space, which is absolutely going to become humongous. And Jonathan comes from Singapore. Singapore was a very, very interesting marketplace during the 2016, 17, 18, during that boom of the crypto space. Everyone was looking to get regulated, and this is what we were discussing in Singapore, because they have this hybrid approach which they were using. Okay, we wanted to have innovation, but we wanted to provide protection to consumers. Now, where I come from, the UK, there's only one approach, which is compliance, and that is killing innovation and adoption and the growth of the sector. Just look at how many unicorns have come, how many unicorns you have seen in the United Kingdom over the last 5 or 10 years. Where are we? More importantly, speaking on the same subject but slightly from a different perspective, from the pension funds which are supposed to invest in your homegrown technologies, they are not authorized to do that. They are, for a higher return, they're going somewhere else to invest for those particular unicorns. So I think APAC from that particular perspective is really good, because this is where the risk to reward ratio is great. But then you do have a jurisdictions like Singapore, which is giving you protections at the same time as well.
Absolutely. I think Singapore's got a bit of a lucky break there with SingPass and having a relatively government-regulated product for consumer trust. And it does show us a bit of a playbook in comparison to some of the other markets that lack some of those features. But when it comes to the driving force of open banking in some of these markets and the kind of adoption aspect, in APAC, what are the key drivers? If you could point out one of those highlights, what would that be? Maybe if I could ask Sophie.
At the moment, I would think that some of the key drivers is around the achieving the better pricing for consumers and making it a very consumer focused product offering to get individuals in and get their systems, get their banking systems and their finances on the system so they can be utilised. I think what we're seeing in Australia is just the difficulty in doing that. Sorry, did you want to say something? No, sorry. I just want to check. The difficulty that we're having is that doing that is expensive. We have only really 4 major banks. Most people bank with them. Getting people to be aware, first of all, of these new and innovative products, and then adopt them and feel comfortable adopting them, and then see the value in them is really difficult. And I personally, from my experience, haven't seen anything that's really taken off. And I think there has been a general, I'm not going to say a negative approach by the banks, but not very facilitative either. So some of the banks in Australia are really good with their tech. So I think they're trying to almost do it themselves and supersede what a technology company could do. But because of also the other factors that we've talked about, starting a business that leverages off the open banking framework is going to be expensive. It's going to need a lot of capital. It's going to need a long runway to start showing returns. We're just not in that investment cycle at the moment where there's people who are willing to step up and put the money into such a long runway. Hopefully, from my perspective, we see something good come out of the UK, maybe out of the US, that gets adopted and repurposed in Australia. But for now, super good concept that's just plodding along.
Got it. I think, Jonathan, you're in the space of payment orchestration and kind of making that CapEx or OpEx cost for businesses a little bit cheaper since you're aggregating the payment space, right? Would you say, that's a fundamental key driver for financial institutions that want to partner with you?
I'd say businesses, when it comes to open banking, are probably one of the best or the clearest beneficiaries, and that's because other forms of payment can be quite expensive. Just to use an Australian example, the cash collection company Armaguard essentially went bankrupt because picking up and moving physical cash around is incredibly expensive because of the risks, etc. Of course, if you're a business who transacts or offers digital commerce, receiving digital payments via cards are a really expensive way to do it. So open banking, to me, is an opportunity for businesses to lower their cost of fund acquisition from their consumers. So for all of the companies in this room, or for all of the consumers in this room, a clear benefit for me is lower pricing, because the cost of doing business reduces through open banking and some of the A2A or real-time payment solutions that become available through it.
So it's really for financial institutions kind of eyeing that revenue pocket of maybe lowering the customer acquisition cost whilst also maybe growing their corporate base, right? Amazing. Did you have something to add, Naeem?
Sarah, I'm going to go back to something where you said about education in your comment and how important it is. And then you also referred to Revolut. How Revolut became so popular was through education. Got the trust from the public. That was sort of our products and how compliant they are. And then on the back of that, we had just heaps of new similar banks like Starling and Tide and so on and so forth. I wanted to share a real example through which we produced efficiencies in my own personal business, not to do with Zaire Capital Markets. And then that is by using the power of open banking. So in the United Kingdom, if you are a new property developer or an investor where I acquired a site, I built 10 apartments and then a few commercial units over there, there were a few ways to do the transaction. One was, as Sophia said, you have your main players in the market, you go to them, and then you go with how much they wanted to really put you down with the fees because you don't have an experience in the market, you guys are new, so they're going to charge you higher fees. But then you have the other solutions through which the open banking really provides you. The other banks, the challenger banks, will support you because they wanted to have the business from you. We were able to walk into any of these particular challenger banks, which were very much giving us what we need in terms of the product at a fraction of a price that what the high street bank was really giving us in terms of our development. Now, not only that, I closed the transaction of the 10 apartments, converted it into an Airbnb business, and guess what? All that cash revenue now sits with one of these challenger banks within their accounts. We haven't moved it to any of the high street bank. The next transaction, which I bought a site in near Manchester, where we're going to have 40 apartments over there. Again, we are not going to high street banks. We're going to the challenger banks because they are the ones who supported us in the first place. Now we can go to a high street bank and get a much better deal what they were offering us before. But challenger banks are still giving us a better prices in terms of what high street banks are giving us.
Yeah, absolutely. I see that, when it comes to the speed of rapid innovation, challenger banks are the ones that would want to collaborate openly more.
Especially when you are dealing with a transaction which is very time sensitive. So the speed is a very, very important thing at that point.
Yeah, or even bespoke financial services, like in asset, wealth, there's a plethora amount of APIs that I think traditional banks kind of miss out on the monetization opportunity. And going into the collaboration and kind of competition aspect, how is the traditional financial institution, the legacy organizations, how are they collaborating right now with fintech companies in the open banking space? Like, especially in the US, I'm curious to know, because I remembered my boss coming over and he said, "Hey, check this out." And I said, "Whoa, what is it?" And he had a TransferWise card, and on the back of it was some rural bank in country America, in some, it was really one of those, maybe not a challenger bank, but maybe you could call it a very small bank that was just running the whole kind of Wise operations and providing banking as a service. What's that kind of like in the US market in terms of legacy financial institutions? Sam, I think that's for you.
So we don't have an open banking mandate in the U.S. yet, although it's probably going to be impending from one of our regulatory bodies coming later in the fall. But I would say there's a great deal of collaboration in general. There's open banking as in the regulatory framework, but then there's open banking lowercase, which is just any exposure of a traditional consumer account information at banks to fintechs, and there's many use cases, much collaboration. Probably the most representative one in the space would be Plaid. If you know, you integrate via a single API, and you have aggregation information from all of the banks that are on their platform, as well as any other fintechs. The other piece, I think, with just tech and bank collaboration would be the biggest innovation in the Western world in payment services and financial services, which is Apple Pay, an innovation coming from a tech company, but taking account information from an issuer and pushing it into a mobile device for the purpose of payment. So that collaboration is still there, and we can't move the industry forward without that collaboration.
I think the US is an interesting example, though, because a lot of advocates for open banking have talked about competition and therefore more accessibility, better pricing, etc., more choices. However, I think in the US there's something like 10,000 financial institutions or slightly more, and a lot of those smaller banks, regional banks, community banks are actually starting to say, hang on a second, we are disadvantaged by some of this innovation because we can't afford to invest as much as JP Morgan or Citibank, etc. So we're starting to see the flip side of that coin now, where people are saying, if you're a provider of financial products or services, it's actually very expensive to have some of this cutting edge technology, and they feel, I guess, disadvantaged with the open banking and some of the progress that it's made in markets like that.
Absolutely. And, would you say, I know this is probably a controversial question, but would you say that open banking is, seen as a threat in some markets, or seen as an opportunity for, the traditional players? Sophie?
I think at the moment most banks are seeing it as a threat, but actually based on what we've all talked about, I think it actually is an opportunity, because there's so much consumer inertia. Dealing with banks is difficult, and the more, we're all probably quite well travelled, the more you go around trying to get banking and banking relationships, the more you realise it's really a difficult thing, and it shouldn't be. I have a view that it's really almost a right that you should be able to open up a bank account. You could have your bank account shut, but you should be able to open it. So, yeah, I think that banks are seeing it as a threat, and I don't think they're seeing it at this point as the opportunity that it could be, particularly around client acquisition, around pricing, and we're moving into the next phase of open banking, where there's going to be the capacity for some of these technology companies to actually initiate transactions on the consumer's behalf, which is going to make the movement of funds so much simpler. And if you're on the right end of that, the receiving of the funds can only be positive.
I would say that, look at the example of Netflix, just like how Sophia said, and the robo-advisory, how that has evolved, and then it is so much the marriage between the consumer spending and the investment is so strong because of the robo advisory that they are offering. NetVest is not like, that's your high street bank. It never used to offer its consumers an opportunity to invest or into anything like that, let alone the robo advisory. But now on their platform, as they were threatened by the new innovation, now they said, okay, let's start adopting them. Let's start doing the acquisitions within the small space, the companies which are just have a higher user base or have a great product, and then let's bring them on board. Because what big banks they have volume in terms of customers. They have a huge. All what they have to do is they have to just acquire the right technology and then plug in with the existing user base.
Yeah, one of the key things that happen on a everyday kind of use case in our market here is, the speed of integration. Usually that's down from 3 to 9 months for some of the traditional banks to like integrate with your Toyotas and the Hondas just to run a payroll disbursement kind of mechanism. When it comes to kind of the future of open banking, and your thoughts on what those key trends could be, what are some of the key takeaways for our audience as we finish up that you could share with us on what you think would happen in the next 5 to 10 years in APAC and beyond? Maybe I could start with Sam.
So my prediction is that regulation will mature across countries, particularly in the less developed countries of Southeast Asia. We'll see more and more use cases also kind of spurred by the increasing digitization of financial services as well. And then hopefully we will also see a lot more wealth creation, a lot more opportunities for the underbanked and underserved individuals.
Amazing. Thank you.
Yeah, I think we're just really still at the very beginning of the open banking journey. I think it's taken a lot longer than anyone involved in that journey would have hoped. But I see it it's going to rise up over time, and I think it's going to expand out into other industries. So you have a lot of data that's stored with a lot of different companies for a lot of different reasons. Your phone bill, your electricity bill, your Uber account, all these different accounts where you have helpful data that can actually, if it falls into the right hands, can be used to create a better outcome for individuals. And I think that's really the important thing, because I suddenly, as I go on through life, I realize that there's a lot of people out there without the sophistication that many of us have by talking about money things all day. Most people are doing lots of, they're teaching, they're nursing, they're driving a taxi, that they don't know about all these money things, and they're the ones who need the benefit, like we were talking about before, and I think we'll get there.
Absolutely.
I think we will see the level field becoming a bit more even. The democratization of information is going to make the user more educated with respect to where they wanted to invest. And especially with artificial intelligence and then various different versions of ChatGPT, which many different banks are already installing or using within their services, is going to take things to a completely different level, higher access to various different products, which we would not even imagine as of today. And more importantly, from the investment perspective, I would be very much looking at companies which are increasing CAPEX, which, I mean, still this year we have seen massive increase in terms of our CAPEX among banks and various other investment companies. But I will continue to monitor them, which companies are they making investments in, and then what is the vision for those particular companies to take the world within that area. That would be my focus for the next few years.
Amazing. Thank you, Naeem.
I'd agree with the rest of the panel that we are at the start, not the end, and that the pace of adoption will only accelerate. So Juniper Research has said that open banking will enable approximately $330 billion of payment volume by 2027, and we're about $57 billion today. So that's a significant growth rate in a very short space of time. And perhaps one of the easiest ways to understand why that's going to happen is FOMO. I heard another commentator talk about children playing with toys, and imagine there's a toy to the side that no one's playing with. As soon as a bank, a business, a consumer reaches for that toy that no one else is using, immediately the other ecosystem participants think, no, I want that. There's something I can do with that particular toy data. I had an innovative idea that I wanted to deploy using that data. And therefore, because of FOMO, I think we're going to see a lot more conversation about open banking. We're going to see a lot more use cases, and it's just right around the corner.
Amazing. Well, we've got about a bit of a minute left, and I wanted to open the floor for a question or two. Is there anyone from the audience that has a question for our esteemed panelists today? You can just raise your hand. Don't be shy. They don't bite. No, I think we've got a pretty shy crowd today, guys. So I think we can just wrap things up. And thank you so much for attending IFX 2024 and the rise of open banking, as well as giving us insights on APAC and beyond.
Thank you.
Please give a round of applause, guys.